Today is Thursday, March 28th. We are now live with the latest in the crypto world. It's 11:30 a.m. in New York City, 2:30 p.m. in London, 11:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. The cryptocurrency total market capitalization has increased very slightly over the past 24 hours. The Bitcoin dominance continues to decrease, while the trading volume continues to hover over the $35 billion mark. Let's take a look at some of the indicators. The cryptocurrency index, CCI 30, continues to show a bullish momentum and has moved north to almost 2,535 points on the 15-minute chart. The year-to-date change nears 17%, and the month-to-date has climbed to over 13%. The 30-day Bitcoin volatility index continues to drop and now stands at about 1.2%. The 24-hour traded volume indicator has slowed down by $2 billion, but still holds above the $34.5 billion level. The Bitcoin dominance indicator is on a slight downward path, and it is now about 50.3%. The top 5 digital assets are mostly in the green, but not by much. Bitcoin experienced a reverse Bart-Simpson on March 25th through to March 26th. Its price dipped below $4,000, but has corrected upwards and now stands at about $4,070 after a 24-hour gain of 0.5%. Ethereum shows a gain of nearly 7%, and its price has managed to break through the $140 resistance line. XRP is the only top 5 crypto in the red. Its price has lost just under 0.2%, remaining just below the 31-cent level. EOS is the top performer in this group with a move of north of very close to 5%. The price of this altcoin is currently at about $4.30. Litecoin is on a slight bull ride with an increase of slightly north of 0.2% as its price hovers over the $61 mark. The Coin360 heat map continues to be mostly green today, with a few red blocks across the chart. According to the Token Spread website, the XMO exchange shows the top spread for Bitcoin dollar of 0.12%. The BitMEX and Bitfinex exchanges show the biggest intermarket spread of just below 2%. Before we wrap up this segment, let's take a look at some of the characteristics of the Huobi token. This decentralized digital asset is based on the Ethereum blockchain, and it does have a limited supply of 500 million tokens. It is a native digital asset of the Singapore-based Huobi exchange, where it can be purchased. Just like other exchange tokens, it provides benefits for its holders like fee discounts and like rewards. The token was distributed in early 2018, and its price peaked at nearly $6 in June. As of today, the asset trades at just over $2.40. We will now review the performance of various cryptocurrency asset classes. We use the data from the Messari website, which groups cryptocurrencies into 5 major categories. The infrastructure group shows an overall gain of about 0.6%. A top performer in this category is EOS, with a move north of about 4%. Cardano and Ethereum Classic have seen a loss of value of approximately 1.5%. The media and entertainment category is a top performer among the 5 groups. It has moved upwards by about 2.3%. Decentralized Mana token is a top performer with a gain of about 34% according to Messari. Basic Attention token and Theta token, as well as LBRY credits, are all up by 4%. The financial sector has moved north by 1%. Komodo is one of the top drivers up with an increase of about 7%. Chainlink has also moved up by about 5.7%. The currency category is a top performing group, as it too is up by close to 2.4%. Bitcoin, Litecoin and Tron are all up by about 0.5%. Gruen has turned its smile into a frown with a loss of 2.2%. And lastly, the services section is up by almost 1.5%. Storj and Power Ledger are both up with a gain in the vicinity of 6.5%. The Enjin coin is one of the top losers with a move south of nearly 1.5%. This is where the 5 major cryptocurrencies stand so far this Thursday. We will now focus on the most significant moves among the top 100 cryptocurrencies to identify the top gainers and the biggest decliners. We will start with the gainers. The top gainers show a couple of double-digit gainers. There are no top 30 coins among this list. Decentralized Mana token has shot upwards by more than 40%. It traded sideways most of the past 7 days, but very early this morning, its price began climbing to just above 7 cents. The firm recently announced the launch of its decentralized app Builder, and the kickoff of its creator contest continues to draw attention on Twitter. Ravencoin is also riding a bull with a 24-hour gain of 27%. This mineable coin shows many ups and downs on the chart, but its price is still on a move north over the past week. Walton Chain is up by slightly more than 8.5%. The price of this token is just under $1.50. Its 7-day chart shows very minor fluctuations and a move north that began on March 26 when it announced the Bamboo wallet is available for download on its website. It also spoke of the update of the Global Anonymous Node community webpage, adding Latin America, Vietnam, Turkey, and Brazil. Factom is up by just over 8%. The coin has seen many swings throughout the past 7 days, but the price has risen by about 30 cents to just under $6.90. The chart shows the formation of a Bart Simpson move. The project's team has been busy promoting its blockchain application at many international forums. ION is up by just over 7%. The price of the mineable coin is currently about 15 cents after a week of various swings. Its developers announced the launch of Cranberry, a project aimed at incentivizing loyal ION miners. It also revealed that the Trust Wallet app now supports its coin. We'll now move on to the decliners. Only one cryptocurrency shows a double-digit drop, while the rest are in the red between 1% and 5%. Repo is the top loser with a move south of almost 28%. The price stands at just under 44 cents. The token shows many ups and downs over the past week that has been mainly bearish. ABBC coin has lost about 8.5% of its value, and the price stands at just below 20 cents. This coin has seen many fluctuations, but overall it has moved south in the past 7 days. Crypto.com chain is losing as well. The price has moved down by 2.4%. The token has seen some fluctuations, but is mainly bearish on the 7-day chart. Bytom has lost just over 2% of its value and is now priced at just below the 11-cent mark. After the past week of many slight ups and downs, the price remains essentially unchanged. KuCoin shares is south by 1.8% and its price is $1.32. But in spite of many ups and downs over the past week, the price is still up by approximately 10 cents. These were the top 24-hour moves during the European morning trading session this Thursday. We will now join crypto expert Kevin Merko, CEO and founder of CoinMetro, and Jason Fernandez, CEO and founder of AE Token. Hi guys, thank you so much for joining us. How are you doing today?
Hi, Leah.
Very good, thank you.
Great to have you. Now we'll jump straight in. The crypto market has been mostly in the green over the past few days. The total market cap is holding above the $140 billion level, and trading volume remains over $35 billion. Bitcoin dominance continues to drop just slightly. So how can we interpret this? Kevin, would you like to begin?
Sure. So we've been discussing this, I think, over the past couple weeks, right? As altcoins have started to kind of take I guess the front lead when it comes to the increasing market cap of the overall crypto market. So we're still seeing, to a certain extent, money moving out of Bitcoin as we start to see the dominance lower, mainly because I think most of the people most traders that have money sitting in Bitcoin are starting to become lulled to sleep by the lack of volatility and are starting to kind of hone in on small caps, so smaller assets that they can move money into that are highly or more volatile than Bitcoin is at the current time. You know, you're talking about if as a relatively small percentage of the capital that sits in Bitcoin can move into a couple dozen different small cap cryptos and move those assets by 3, 4, 5, 6, 10, 12, 15% quite easily. So we've been seeing that now for the past couple of weeks. So while we do see the market cap rising overall, most of that is not new money coming to the market. It's simply money moving between assets. So it's moving out of Bitcoin and into other assets, mainly because of hype cycles that we've seen, and lots of news that's actually been hitting the wires for different assets. Lots of news around Stellar, lots of news around Engine Coin, lots of news around. There's just been lots of news coming out, lots of PR. Lots of partnerships, lots of things that are driving people to move money from let's say the more dominant asset, which is Bitcoin, out into these smaller small cap assets.
Okay, sure. And Jason, how do you think we can interpret these indicators? What are your thoughts here?
Yeah, so overall, I think these are all good signs. Certainly, the total market cap increasing is a good sign. The trading volume increasing is a good sign. As Kevin pointed out, basically we're in alt season again. So obviously, a lot of money is moving from Bitcoin, which is the dominant cryptocurrency, to some of the smaller cap cryptocurrencies, and obviously that's making a huge difference to some of these cryptocurrencies, because even like Kevin mentioned, even a small part, even if a small amount of Bitcoin moves, Bitcoin's funds basically move into other cryptocurrencies, that can have a really huge effect. One of the other things I wanted to point out is that recently there was an industry researcher named JP Thor who kind of looked at some of the numbers, and he basically suggested that the classical method of using market cap to weigh an asset's dominance is pretty much flawed. So his point is that if you take volume and liquidity into account, and he did this by basically aggregating the last 12 months of trading activity, Bitcoin is basically it's well above 50% when engaged by market capitalization, especially when we talk about liquidity. So according to his numbers, he says that Bitcoin has a consistent dominance reading of over 80%, and that's only trended higher lately. So essentially, one of the points that's going around, that's being discussed, is that perhaps calculating Bitcoin's dominance just solely on market capitalization may not be the best way to go. Maybe may not be the most accurate way to get results.
Okay, interesting. And sort of continuing with Bitcoin for the minute, let's talk a little bit about Bitcoin halving. So this event in the past has apparently been the cause for major price surges. Some experts actually believe Bitcoin will surpass $55,000 after the halving in May 2020. So what is your view on this issue? What do you think is going to happen, Kevin?
Well, obviously halving is going to have an issue, mainly because it just means block rewards are lowered, right? They're half. So it just adds to the scarcity of the asset. I don't know where the 55,000 comes from, but I'd venture a guess that they're simply taking the percentage increase of Bitcoin from the last halving and applying that to the current price. And I think that's a flawed way to do it, because essentially, as the price point of Bitcoin increases, the market itself changes. It's much different when you have an asset priced at, let's say, $10 for it to jump to $500. While the percentage may be the same, it's a very different thing for an asset to go from 3,000 to 4,000 up to 55,000. There's a lot of psychological barriers, and outside of that, you're just simply talking about the amount of capital that needs to come in to get it to that point is massive, and it's massively larger than it was previously. So I think that prediction is just, you can just throw that in the bag with all the other predictions that come out on a daily basis in this market and every other market. But halving will have an effect, that's for sure, because basically, like I said, it is making the scarcity. It basically increases the scarcity of the asset, and which means that there's less there's less Bitcoin to be had. The same amount of work needs to be done to receive half the amount of reward, half the amount of Bitcoin, and that will indefinitely have an effect on the price point of Bitcoin. That's for sure. But I think that 55,000 is somebody's just applying, like I said, some historical reference, which, to be honest, really can't be applied directly, because the price points are so different.
Okay, so Kevin, you think something interesting is going to happen, but you're not overly convinced by that prediction there. So Jason, are you convinced by the prediction? What do you think?
Yeah, I'm not super convinced either. Just to recap, essentially, normally miners are rewarded with a certain amount of Bitcoin for basically securing the network and validating transactions. And every few years, those rewards are halved. So essentially, that's what they call Bitcoin halving. And ultimately, obviously, if when the supply of these rewards go down, that generally raises the demand for Bitcoin because of scarcity. So essentially, there's a theory that the scarcity. So I read the post that mentioned the 55,000 number. And essentially, his point is that Bitcoin, what makes Bitcoin massively valuable is essentially its scarcity. So one of the points is that Bitcoin is the first scarce digital object that basically the world has ever encountered. So we don't rarely see things that are actually digital, but are also scarce, because you can copy a file as many times as you want without any scarcity. But one of the points about Bitcoin is that unlike silver and gold, you can send Bitcoin over the internet, radio, satellite. And the Winklevoss twins have actually pointed this out and essentially said that they believe that based off of these things, that Bitcoin is actually more valuable than gold. I mean, we know that Bitcoin, like that gold and silver, can continuously be found and mined. And even if gold and silver are lost, which sometimes happens, they could theoretically be found someday, and that's not the case with Bitcoin. So the set amount of Bitcoin is 21 million. It will never increase. And in fact, it's actually less than that, because something like 36% of Bitcoin's total circulating supply has actually already been lost forever. So the theory behind this 55,000 number is that Bitcoin's finite nature and the fact that it's extremely scarce is what could potentially drive its value to mass amounts. And so generally we see when there's a Bitcoin halving date coming up to like 18 months prior to that, we see people start accumulating Bitcoin. Now, is it going to jump up to 50,000 or 100,000? I doubt it. And the main reason I would say that, although it's possible, the main reason I would say that is because this is in 2017. There are a lot of new coins. There are a lot of new coins that are doing doing a lot of actual work. So this isn't the same. So basically, this goes back to we're comparing the rise to the last time Bitcoin halved, and it's not really the same market now because you see all these other tokens, Ethereum, EOS, that basically are all wrestling for the same position. So it's not going to have that much of an impact as much as it had previously. So that's one of the things to keep in mind.
Okay, well, Jason, thank you for clarifying where that 55,000 came from. Very interesting to know. Now, Coinbase announced the listing of Stellar and that it is giving away 1 billion XLM coins. These type of news usually drive up the price of the relevant crypto. So the project has been busy too, also with partnerships with IBM and Western Union. So can we safely say that the price of the coin will increase and that it may even move up from the current position as number 8th top cryptocurrency? Jason, we'll go straight to you. What do you think?
So, okay, overall, I've been bullish on Stellar for a while. I certainly think that it's earned its place in the top 10. I can't say how much the price of the coin will increase in the near future because we've seen it rise rather meteorically over the past few weeks. We know that it experienced a correction a couple of days ago, but it's since rebounded. Generally speaking, when you have somebody like Coinbase essentially offering to flood the market with 100 million Stellar coins, $100 million worth of Stellar coins. Sure, it won't happen all at once. It'll happen, over time. But it's almost akin to an airdrop, and that could conceivably create a glut in the market where you have people that have newly received Stellar tokens, thinking that they want to sell some and make a quick bit of money. So that could drive the price down.
Okay, sure. And Kevin, what do you think? Can we safely say the price of the coin will increase, or do you think it's going to go down? What's going to happen?
Well, exactly what Jason just mentioned. We just talked about scarcity on the last question, and here we have somebody throwing, 1 billion tokens into the market for free, which obviously doesn't help with scarcity, which is one of the main factors that drives crypto price on any of these assets. All these assets are generally created to be illiquid, to create scarcity, to drive value. So releasing a flood will inevitably have a lot of people that didn't actually buy these tokens sell them for a quick profit, as Jason mentioned, which inevitably could, at least over the short term, cause the actual price point to fall. However, Stellar has been coming out with, as Jason mentioned as well, lots of different partnerships, IBM being, I guess, the most relevant in the past few weeks, which is a bit odd because Stellar obviously one of the Ripple co-founders founded Stellar. And while Ripple looked to work with banks, Stellar was trying to work with the unbanked. And now they're working with banks, which I guess indirectly means they could work with the unbanked through the banks. But it is a bit of a, I guess if you're a true fanatic of the, I guess the value proposition or really what the project was trying to do in the initial stages, which was to get the unbanked banked, you might be a bit upset about the current way that they're going with this IBM partnership. But it's a solid business. They're building out partnerships. So as we start to go from this hype-driven market into a more cohesive market where the value of the business actually correlates a little bit more to the value of the token, this would tell me that, yes, the price probably will inflate over time. But it's not just we do have to see a maturing of the market at the same time. So we need to start seeing this across the entire market where we're not just a hype-driven market. But in this current hype-driven market, I would say yes. But that billion tokens flooding the market will definitely not have a positive effect in the short term.
Okay, sure. Two very interesting opinions there. And we have talked about Bitcoin dominance before and how its decrease could actually be a good sign for the crypto market. So is this a fair assessment, or is it simply part of the altcoin season? Kevin, what do you think?
Well, this altcoin season that we've been talking about, I think is probably something we're going to continue to see. And as I touched on and Jason touched on as well, the fact that, in 2017, 2016, Bitcoin, there wasn't many assets to choose from in this market. Now there's a plethora of assets. However, most of the liquidity is locked into one particular asset, that being Bitcoin, which means that most players that are, let's say, that got into this market and are now not really bringing in fiat currency, they're simply they're cryptophiles, and they have crypto on deposit. Most of that money is going to sit in Bitcoin. So when they want to move it into other assets, when other assets look like they may outperform Bitcoin, well, guess where that money's coming from? Bitcoin. So and Jason made a nice point, and I would love to have followed up on it about an 80% dominance when you really look at volumes and things like that. Remember that in this market currently, when you buy assets on a more mature market, let's say you go to NASDAQ and you want to buy a stock, or let's say you go on the FTSE or whatever, and you buy a stock or some type of asset. You don't buy that asset it's not crossed against anything else, right? If you're in the United States, you buy an asset, it's priced in dollars. If you go to European markets, it's priced in euros. If you go to a Japanese market, it's priced in yen, etc. Here in this market, we cross everything against other cryptos or fiat currencies, etc. So Bitcoin, while you may be selling Bitcoin or people may be buying other assets, they may be buying them against Bitcoin, which means they're selling Bitcoin, which means even though the dominance of Bitcoin is decreasing, the amount of actual transactions Bitcoin is involved in, like as Jason kind of alluded to, is probably higher than 80%. So I think you kind of need to look at many different factors when you look at this alt season in total. I do think, though, we are starting to see it. The market is maturing slowly over time. We are getting more assets. There will continue to be more assets that come into the game. Bitcoin holds a dominance because it holds the liquidity. But as it starts to lose a hold on liquidity, it's going to start to lose some of that dominance. And we still haven't really, I don't think we've truly seen a true definition of what Bitcoin is yet. So as more players come in with more use cases that are applied to specific industries, to specific services, specific problems, we'll probably see that dominance, at least the dominance when you look at market cap, erode a bit more over time. But again, that doesn't necessarily mean Bitcoin is not dominant, because right now it's probably underpinning most of these transactions, even though it's being sold.
Okay, some very insightful thoughts there. And Jason, tell us, what do you think on this, please?
So I think it's said that basically lower dominance is generally precedes a major bull run. So we've seen that in the past. So for the Bitcoin's 14-month bear market ended up behaving pretty much similarly and ending in a bull run in 2015. So we've seen that lately Bitcoin has charted a series of lower highs and lower lows, and that's known as a descending channel. And basically the upside break of that falling channel was confirmed in October 2015, was followed up by a 2-year bull market. So that implies that the potential upside break of this falling channel could be considered a sign of a long-term bearish to bullish trend change. Certainly, if history repeats itself, that would be the case. And maybe Bitcoin could see a sustained channel breakout later this year. Going back to the whole question of alt season, that's a major contributing factor to this also, because the fact is that Bitcoin is not risen as fast as some of the lower cap coins rather. So if you had the same amount of money in Litecoin, you'd be flush right now. Whereas if you had that money in Bitcoin, it's only going to go up, barely marginally. So new money coming into the market is basically filtered through this lens. So people investing in cryptocurrency for the first time have to basically make a lot of decisions between both Bitcoin and any number of really great cryptocurrencies. And so while holding some amount of Bitcoin is definitely a hedge, is an obvious hedge anyways against some of the extreme volatility we see in some of these smaller cap coins, the levers and the amount of potential profits are much, much higher, obviously with the cheaper assets. So of course, as Kevin pointed out, a lot of Bitcoin money is moving into some of the cheaper assets. I think that's going to be a trend going forward. But we hope that this this could signal some sort of bull run coming up, especially if history repeats itself.
Okay, sure. Now, just slightly moving on for a sec, there are reports in the crypto circles that Fidelity Investment is considering supporting Ethereum, and that on this news, the price of Ether would see a rally north in April. Is this a risky prediction, or can it be constructed as fair? Kevin, what are your thoughts, please?
I think any prediction like this, I would consider to be quite speculative, especially when you're talking about the possibility of a partnership. But there are ERC protocols that are already looking to kind of tackle this tokenization and the movement of ownership across the blockchain and tracking ownership and being compliant with regulations. I think ERC 1400, 1410, I think, are the two that are being worked on currently to try to come to some type of standardized protocol. So Fidelity may be interested in just that because obviously they're probably looking into tokenization of assets like every other major player in the financial space. But I think talking about predicting a possible partnership based on maybe some leaked news or something like that is always highly speculative.
Sure.
So you do have to take these things with a grain of salt, and until it happens, well, I mean, obviously you take the risk and it does happen. It could mean a decent amount of upside, but if it doesn't happen, it could mean a decent amount of downside. So
Sure.
Again, it's still speculative until it happens.
Okay, and briefly, Jason, the same question to you, just very briefly for us, please.
Yeah, I fully agree. I mean, it's so speculative because we really don't know if and when the partnership will actually materialize. But Fidelity's cryptocurrency culture is just insane. I mean, you have hundreds of passionate advocates at basically every level of seniority in the firm. Supposedly, they have more people working on crypto than the 5 biggest crypto funds combined. Their approach to custody from a security perspective is really impressive. You don't see many companies actively mitigating things like HSM supply risk. So they're doing some really interesting work. And yeah, if Fidelity eventually supports Ethereum, it could definitely see a boost. But we don't really know whether that's actually going to happen.
Sure. Kevin, Jason, thank you so much. It's been an absolute pleasure having both of you on the line with us today. Thank you.
Thank you.
Thanks, Leah.
Now, before we sign off, I do have a last-minute update from my editorial staff regarding the crypto market. The total market capitalization continues to hover just over the $143 billion level. The 24-hour trading volume has slowed down slightly, losing over $1 billion to position itself at about $33.3 billion. The top 100 cryptocurrencies show a mixed pattern of green and red across the list. But the top 10 cryptocurrencies are moving north, except for XRP, that is only 0.2% in the red. This wraps up Thursday's Crypto Now live show. We thank Kevin Merko and Jason Fernandez for their expert analysis. We thank the audience for joining us and invite you all to accompany us every weekday at the same time.